I'm Shay Russell from Miningcomau, and I'm coming to you from the Resource Rising Stars Conference here at Surfers Paradise on the Gold Coast. Sitting next to me is a man who needs a little introduction, but I'm going to do it anyway in case it's your first time, and that is Data Dan Petrie.
Right.
Data Dan, how are you? Great to see you.
I'm well, Shay. How are you?
Fantastic now that I'm here on the sunny Gold Coast.
The sunny Gold Coast, and it is sunny today. Very, very nice.
It is. Beats what I was dealing with in Melbourne, but we are here at yet again another junior mining conference. Now, I've done a quick spin on the ground, and I've noticed that there seems to be a lot of gold and copper explorers. And it's interesting because retail sentiment towards this sector has been a little bit on the depressed side, yet there's a lot of optimism in the room. Tell me, what are you seeing?
A lot of optimism in the room, but also it's a case of what's the pathway to production is the second question off everybody's lips at the moment. But like the data is key here, and it's all about price. And that we've got gold at $2,500 per ounce now. Again, it's really which one of these miners down here or any resources company can produce enough of the product at the said price. Now, that price is elevated, certainly a very good story for miners, but also should be taken with some context as to what it means to the broader economy in terms of, having gold, for example, central banks having gold in their balance sheets is quite a significant thing. So a lot of optimism, but again, copper's also that mineral which everybody wants at the moment, mainly because of its conducting abilities with heat. But a very good story in terms of optimism, sure, but these prices, particularly for juniors, have come off massively over the last 4 months.
Unfairly smacked down, way below their, every explorer in the room will tell you they're undervalued.
I just talk history. I don't talk feelings. I talk numbers.
Which is why we've got your data, Dan. Speaking of data, we've got, it's the first week of the month, the RBA meets today. Might touch on that a little bit in a second. Big data week. We've got US manufacturing data coming out. We've got inflation data coming out next week, I believe, all ahead of the Fed meeting in September and the much anticipated and very much pricing rate cut. Tell me, again, this is very much a what are we seeing the data tell us leading into, I guess, the Fed, the mothership of all central banks. What is this data telling us going into that meeting?
Well, basically, they're telling us that it's now that inflation, they believe, has been curtailed for the time being. When you've got a lower cash rate, it obviously means more money, effectively. Not huge amounts of money, but we are talking a reduction in the cash rate. Certainly means that the economy is not flying on all cylinders. So this is really a supportive measure for the economy. So that's to keep the party going. So, we often talk about the unwind, which has happened since COVID. You've never seen a period, really, in recent history where you've had fiscal policy and monetary policy working so aggressively towards promoting growth. And when inflation finally arrived, everyone went, "What? This is an outrage!
What a surprise!"
But that is really what it comes down to. At the moment, Fed comes off, and then of course, that should augur well in terms for investors, and particularly stock market pundits, who will regard this as a positive, but by and large, it should also be seen in the context of this is the central bank perhaps supporting the broader global economy.
When we say supporting the broader global economy, it's really about trying to prevent asset price deflation at the same time, as well as stimulating the right avenues of growth, isn't it?
And to keep people in JOBSs.
There's jobs data coming out this week as well, isn't it?
My favourite report.
Are we going to see the sort of hissy fit we saw last month when the non-farm payrolls came out?
Again, not a crystal ball guy, but if it put it this way, if the non-farm payrolls is a surprise on the downside, as in there's not as many jobs created, that could actually be seen as a positive. That is, that the Fed could be urged to cut more aggressively or to add another potential rate cut in their forecast, and that would be a positive for markets. If on the other side it's a blowout number and lots of jobs have been created, the appetite for more rate cuts might pause. So you actually, there's a psychology there which is quite strange. I remember writing about it very early on in my career, and I couldn't quite get my head around, and I think for the poor old readers, they couldn't get my head around what I was writing. But that is actually a huge part of of some of the psychology. So you really want a number around what economists are saying. But again, the US market is very different to China, where the results don't necessarily match the forecast, so to speak.
Now, moving on to Australian data. Now, we've got the RBA meeting on Tuesday, which is the day the conference is being held. We've had the interest rates being held steady in Australia since November 2023. Cash rate currently sits at 4.35%. And yes, I did have to look that up before we started today. We've also got trade data coming out. And there's a lot of sort of second guessing about what the Reserve Bank's going to do. There's the facts, and then there's what headlines are sort of jumping the gun here. How do you see this trade data, I guess, playing into this? Will the RBA cut or won't they cut?
Well, I think the RBA will stay, but it's interesting to see politically it's taken on some quite interesting commentary. You've got the Treasurer, Jim Chalmers, who's said that the reason households are doing it tough is because of the RBA, but the Treasurer might forget to tell you that both his predecessor and along with himself have been the author of some incredibly aggressive fiscal stimulus for household spending and benefits and all sorts of packages to support the household sector and cost of living budgets. Those things are inflationary too. So governments can point to the RBA, but they might want to look at their own spending habits themselves in terms of how that feeds into the broader picture. In terms of the RBA, for example, really does take a big stick when it comes to its independence, and of course, so that commentary particularly from the government, probably more nervous with an ID election, is probably as about as helpful as a visit to the dentist. But really, that's what it should be seen as. There'll be a hold. The governor, Michelle Bullock's been incredibly consistent with her messaging, but I don't know the value of her coming out for a press conference and saying, look, this is where we're at. They're taking on a more nuanced approach. In terms of the trade data, they would be looking at it, seeing some of the bulks, coal, iron ore, those coming off a bit. But, it's still a very good story for trade. We're consistently recording, monthly surpluses in that area. So I would say that Thursday will be an interesting number in terms of looking at what other commodities, for example, are actually really starting to take up some of the slack, and particularly natural gas as well. But that's fallen off a cliff in the last wee while. So whether or not the iron ore and coal story can continue remains to be seen. But I'd expect that trade number to be a bit softer than what it has been in the last 6 months.
I'm going to come back and we'll finish on the bulks conversation last today. I want to unfairly touch on something. Now, in market years, I started out in the markets in 2007. And the reason why I bring that up is I don't remember a time in Australia where the government was politicising interest rates the way it is now. You're only a year or two older than me. Tell me, yeah, that's true. Tell me, do you remember a time, or can you sort of go, as you said, you like to look at history. Can you remember a time in Australia where the central bank and the government were sort of locked in this very public battle?
Well, you'd have to go back to when Paul Keating was Treasurer. And again, that was a time of my life where I had long hair and moved like a cheetah. But when the central bank went independent, really, I mean, that influence of the then federal treasurer, so it was Keating, and before that was John Howard, actually. So there would be, the government of the day would have a profound effect in terms of setting and having that say in central banks. But the idea of having an independent rate setting authority was to kind of get away from the idea of the government punishing households in the name of fighting inflation. It's just interesting to see that the Treasurer's remarks were, he's normally very measured, Jim Chalmers, and so whether that's a sign the government, this is one thing, the current Labor government federally in Australia, no one tends to talk about them.
Yeah.
No one talks about the federal government, whereas, when Scott Morrison was Prime Minister, they may not have liked Scott Morrison in terms of he may have been on the nose as a Prime Minister, and his party had probably been in power for too long, according to the polls. But the thing is, they were still topical in conversation. You almost want to be topical, and no one's talking about you at the moment. You've got an election coming up, and that kind of commentary, I'd have to put the old political hat back on again, but generally speaking, I can't help but feel that's messaging for the would-be voter trying to appeal, saying we're on your side. But attacking the Reserve Bank, and I don't want to verbal the Treasurer there, but Matt Thistlethwaite, the Labor frontbencher, also said, they're going too far. The Reserve Bank of Australia is an independent authority that has to set rates that also observe its target band of 2 to 3%. Inflation is still above that band. So it's, somewhat There are some Labor front benches, and there's always some coalition ones as well. You can add them to the mix that should really perhaps be a bit more measured in understanding and appreciating the Reserve Bank's independence.
Yes, there is a separation between church and state here.
Yes.
For a reason.
Correct.
Now, to take the conversation home, let's talk bulk commodities. I love a good bulk commodity. Maybe I should find other things to do with my spare time. But we talked about iron ore last week. Now, the price is just treading water at $98 per tonne. As we talked about last year, it's not end of days. But as you mentioned before in our earlier conversation, you talked about coal exports and you talked about natural gas exports. What are we looking for in this trade data coming out this week, or what's going to pique your interest, I should say?
Well, the thing is, I'm really interested in what's happening with aluminium. I'm looking at copper, those copper ore concentrates, what's going on in nickel. And now, nickel's not really loved in Australia, but it's certainly loved overseas, particularly in North America. But those commodities, which, for example, don't smash the lights out, so to speak, for example, I was about to say knock the handles off the doors. Those commodities, for example, such as copper, that story is a very, very important story. Tin seems to be having a bit of a comeback at the moment, lead and all these. So that's what I'm almost looking below the headline. Because if you look at trade data, for example, the coal and iron ore value of it, which is published, will almost mask what's going on in that report. And in that report, remember, Australia exports the categories of almost 286 goods and services, but particularly the goods component and what's going on in the broad material space is still very interesting, is still quite positive. And from that perspective, it gives you a leading indicator of where the action is. So sometimes, the headline could be neat, but it's the detail, that second tier below the headline, which is where it's all at.
And this is why we have Data Dan who looks at the detail. Listen, I've run out of time. I know you've got places to be.
I got to go to the dentist.
Oh.
Maybe get some silver in my teeth. No, I don't.
Why not gold?
Always believe in gold.
Listen, this is an awesome conversation. I'm just going to let you know, next week I'm going to corner you for our next week's chat. We're going to talk about aluminium, copper and nickel and what the trade report has revealed. Thank you so much for being here. Great to see you in person, and off you go to the dentist. Don't have too much happy gas.